All right, I think I briefly start with my kind of intro for those who are not familiar to our format. My name is Moritz Schild. I'm one of the founders of Hanseatic Blockchain Institute in Hamburg, Germany. Um, we have set this up back in 2019 when a community of Hamburg-based entrepreneurs started thinking about blockchain, and we felt that it's a good point in time to kind of organize ourselves. And all good Germans, when they feel like organizing is good, they create a fine, which is an association of people that are like-minded, so to say. And as many of you may be aware, we started with having a lot of weekly physical meetings here in Hamburg. When even though back at that time, I think Bitcoin was at 8,000, but the enthusiasm was significantly higher. Now things have changed a little bit, so the enthusiasm has lost a little bit. Maybe it's part of the Gardner curve that now is slowing down and hopefully is speeding up again at some point in time. And Bitcoin, well, used to be a little bit higher. However, it's in a downturn. We have been talking about different things in our last or most recent sessions. And today I think it's a very interesting topic because DeFi is still kind of the hottest stuff in the crypto and blockchain economy and or ecosystem, and then simultaneously AI is among the hottest stuffs in the rest of the world. And combining these two is something that Sail is doing. And with that, I'm very happy to having Alejandro on our talk today. And he is in Madrid, is joining us virtually. And before I hand over to you, I would be very curious to just understand, first of all, what was your kind of initial exposure moment? How did you get into the entire space, and what was the reason for you to decide to stick to it?
Definitely. Well, first, thank you so much, Moritz, for the invitation. It's a pleasure to be here sharing my journey and the journey of my company. So yeah, super appreciated. Yeah, I started actually in crypto in, I would say 2017, but it was, as many people like just buying some cryptocurrencies because they were going up at that moment. I was not really like into the technical part at that moment. I was working derivative products for several banks here in Spain. But yeah, when I was, like let's say accelerating my journey, I started like researching more, like reading like the white papers of the main projects out there, Bitcoin, Ethereum, Solanas. And it was like kind of in 2020, sorry, and 2021, where I really got like into DeFi, like starting actually using DeFi in my daily life, playing around with many DeFi protocols. And it was like a changing moment for me and for my career because I decided suddenly to quit my job, join one of my two friends from childhood, and start like working full time in crypto. And at that moment, we started up that
Sorry
start. Yeah,
to interrupt you, but when you
yeah.
say I started using DeFi myself, what exactly? Because I mean, even that is a broad range, and there are people trading derivatives on orange juice via DeFi, others using leverage to bet on other coins. So, what was your entry point into DeFi?
Yeah, well, it was like in 2020 when I first like started using DEXs instead of, buying and selling token in centralized exchanges.
Yeah.
So at that time it was Uniswap. Then I discovered like lending protocols like Aave. So it's this concept that you can lend money and borrow money in a decentralized way with over collateralized loans. So those I would say were my first like DeFi actions. Then it was like this yield farming stuff, protocols like running crazy incentives campaign, printing tokens that you can actually farm. So that was also like a part of my journey. And there was like a a progress, starting like from only using exchanges until I quitted exchanges, like and only use DeFi, then this was this problem that you needed to bridge from one chain to another. So that was the early days of bridges. That was really interesting as well. So I would say it was like that way. It was a process. It was not like from one day to another. But I think many people have experienced this because DeFi, in my opinion, is really magical when you get it.
Yep.
That's the thing.
But your driver, was it making money or was it understanding the technology?
Both, I would say. It started like trying to make money, just to buy, low valuation tokens and try to ride them. But after, it was like when I actually saw like the potential of the technology, it migrated towards intellectually interested in DeFi. So I was already into finance, so I had some financial knowledge. And it was like mind blowing. It's mind blowing, in my opinion, when you understand that you can exchange one asset with another and you are not actually selling to another person, but you are using a liquidity pool where, and there are liquidity providers. Like, I mean, it was like mind blowing for me. So it migrated from speculation, let's say, to actual intellectual interest.
Yeah. Before we move to sale, you personally, did you only make positive experiences, or have you lost money in wrong protocols and so
M-
on ever?
Mainly lost, I would say. Yeah. Actually, I had some winnings, of course, but at that time, um, and that was a mistake. I mean, from a young person, I think you get like really greedy and you start like moving ahead in the risk curve.
Yeah.
And yeah, I made some money. But yeah, mainly I lost a lot. So, but it was a learning.
All
And
right.
I think that's more valuable than money, actually.
Perfect. All right. I think with that, let's move to sale. And please, dear participants, if you have questions or remarks, please use the Q&A sector, and so we can have your questions. And yeah, if you want to share your screen, I have to
Sure.
mention that Coinix, the company I'm responsible for, has invested in your project because we like it, but giving a better understanding to our audience today is a core focus. When did you found Sail, and what was the kind of initial idea of what purpose it should serve?
Sure. So it was like the end of 2023, when we decided to build something in DeFi, because previously we were like in the decentralized data storage sector within crypto, but we wanted to build something in DeFi. At that time, I mean, the AI boom was already like really accelerating. So we had like this vision that the future of DeFi or of finance somehow was going to be like a combination of AI and DeFi. So we came with this concept of DeFi agents. And I wrote an article about DeFi agents at the beginning of 2024, before all the hype around them. And yeah, we initially built a chat GPT bot for crypto. So it was a way to interact with DeFi using natural language. We launched a closed beta, and we realized that basically users prefer to click buttons and use widgets rather than to write long prompts to conduct simple DeFi actions like swaps, transfers, liquidity providing, etc. So that was a learning, got us like really thinking, okay, what's the real value proposition of DeFi agents, right? Because you can have like artificial intelligence working 24/7 to move money around. But yeah, what the user actually wants, where is the value proposition? So we came to this conclusion that the value proposition is actually two things. First, that agents and AI can provide a deeper or a smarter level of automation that the one allowed by smart contracts like themselves by nature. So you can combine AI with smart contracts, and the output is going to be like way better. And second, personalization, because we, for example, right now are deploying one agent per user and one smart account per user. So when the agent moves money only from that user, it opens the door for complete customization and personalization. And what I mean by this is basically that you can customize your risk tolerance, your financial goals, your preferences, whatever. So we build the infra to make sale possible, basically, because we also realize that most of the agentic crypto frameworks were not good, let's say, like ELISAs, virtuals. Those frameworks are not enough to build a non-custodial DeFi agentic product. So we built our own. We developed the infra from the scratch. Like we are of course using like LLMs and let's say base layer LLMs, but we built like a graph-based infrastructure. We gave the agent like long-term memory, the ability to or create a system where the executions are isolated to the user for security purposes. We built like this really cool UI where our internal team can build the agents and can interact really fast. So basically, when we ended like building that infra, we decided to launch what is sale right now, which is an stablecoin yield agent, right? We like to call it a personal AI agent for digital money because it's currently only using stablecoins, but it may jump to any tokenized asset. So yeah, I don't know. It's okay. I can start the presentation now, or I don't know if you haven't. Yeah. So I already said what sale. But here is like I would say this is like our framework, our thinking framework here is that crypto gave us like digital money. And what we mean by this is that blockchains created digital scarcity in the sense that you can have assets that are unique, right? In the digital world. Then we had like smart contracts that made that digital money or that digital assets programmable. So you can create smart contracts that put that digital money in motion without any intermediary. And that's, super cool. But at the same time, like if you see the tech world, we have this artificial intelligence that for now are completely centralized, sorry, and that can use this digital money in a super easy way because it's actually easy to give like an LLM a wallet, and the LLM can play around with that wallet. Then there are other challenges when you're building a product to make that product actually non-custodial, but that's easy, let's say. So we believe that the synergy between crypto and AI is really clear because crypto is the best money for AI in the sense that it's really fast, the latency is low, it's global, it's not fragmented across countries and regions. So that's why we believe that AI can make money move and think. So this is what we are building at Sail, and it's the future that we are imagining. So focusing on stablecoins, of course, like it's a really hot topic right now, but we are about 300 billion in market cap for stablecoins today. And this is like a pessimist estimation that 75% of those stablecoins are sitting idle. And by idle, we mean that are not earning yield, are not deposited into DeFi in order to generate a return for their holders, right? So the question is why, right? I mean, why these stablecoins are not earning yield? And we believe that DeFi is really complicated. I mean, you have about 2,000 yield sources, or possibly more right now, 200 networks. The amount of stablecoins that have been launched in the recent months is mind-blowing. So we are about more than 100 stablecoins existing right now. And then we have like DeFi, let's say, problems with UX, like you need a self-custody wallet, you need to custody your private key, that kind of stuff. And the normal financial problems that any person may have, which is like financial knowledge. You must know a lot of DeFi in order to maximize the return on your stablecoins. And there is also a risk management problem, because sometimes you maybe use a vault or you use a yield source within DeFi, but you actually don't understand what this vault or this yield source is actually doing, right? So we believe this is the reason. And the thing right now, which also connects with this market today, is that the stablecoin market, it's basically scheduled to grow at least in the next 5 years. So that's a massive growth with traditional banks, neobanks, fintechs adopting stablecoins. And we believe that these players are going to integrate DeFi in a way that they can pass that yield to the holders, so that the proportion of a stablecoin sitting idle is going to decrease a lot with these players entering the market. So what we are building here is like the best way to differentiate if you are a fintech company, a neobank, or a traditional bank that is offering stablecoins. Because an agent, I'm going to get into this in a moment, can give you like a higher output, like a better yield, like risk adjusted terms, but can also offer like a user experience that's completely new, in the sense that it's agentic. You can chat with your agent. You can start like experiencing like what's the future of applications. So we build what is sold today. It's a web app for now. It's an agent that is fully automated, so your stablecoins are automatically moved from one yield source to another, chasing the highest risk-adjusted yield possible. Then it's completely non-custodial, and I'm going to spend a little bit of time here, because as I mentioned before, we have a smart account and we have a unique agent per user. So the way we connect the two is using a technology that is called session keys, or if you want to see it this way, it's a cryptographic permission. So you signed a permission with your smart account, enabling the agent to only deposit, withdraw, swap, or bridge these assets with these protocols within this time frame. So, I mean, we as the creators of the agent, we can do whatever we want with the strategy, but if your smart account doesn't have the permissions to execute or to send that money or to swap these and these two tokens, it's not going to be technically possible. So it's basically delegating the movement of these stablecoins to an AI agent that works 24/7, that doesn't sleep, doesn't eat, and that it's actually smarter. That I would say that 99% of the yield farmers out there. Then, because it's a unique agent, it's personalizable, customizable. So you can like say, okay, I want this agent to not interact with this and this protocol, only with these stable coins in this chain, etc. Right? And then in terms of security, this is super important because people think that we are building smart contracts ourselves, but what we are doing is using session key infra that we built in partnership with Third Web, and the session key infra is completely audited in the sense that the way you build these session keys, hasn't been broken for now, and many audit firms have checked that code. So we are not deploying smart contracts in the blockchain. What we are doing is that we have this AI infra, and then we are connecting those using session keys to your smart account. So actually, since I'm here, I think it's better if I go to the product. This is our landing page. Anyone that can use it can go to sale.money right now. Just click in Open Agent, and yeah, I already logged into this account, but as you can see, pretty simple UI. We have a balance, we have the earnings, the current APY, the transactions that the agent has conducted. Here you can check the APY, sorry, in different timeframes. So for example, this account for the months of October and November, it's averaging a 10% yield. You can go to your portfolio. This agent particularly is deployed on Base and Arbitrum, and it's using these 4 yield sources right now. And you can also go to the history and check everything that the agent did. For example, here he conducted 3 reallocations. You can check like the base can link everything, right? And this is super interesting because here in the profile menu, you can see the permissions. So this is what the agent is allowed to do. So for example, in yield terms, he can transact with these protocols on Base, with these protocols on Arbitrum. He can swap between USDC and USDT on the Arbitrum network, and it can bridge, sorry, from Arbitrum to Base and from Base to Arbitrum using a cross protocol. By the way, for the swaps, we are using Uniswap. So basically, I mean, this is another cool integration. You can connect the agent to your Telegram, and the agent is going to send you daily reminders or daily updates on your protocol, like your earnings, how the yield fluctuated. You can chat with the agent there. So it's like you don't have to come to the UI to see what's actually happening with the agent, and that's one of the main value proposition of the UX as well, that the agent is going to reach you. You don't have like to be actively using an app. The agent is going to contact you and reaching you, right? So yeah, this is mainly the product nowadays. Another interesting feature is that, as you can see here, that we have 3 balance tiers. So the first tier is between 0 and 10K. We have a middle one between 10 and 100K, and then we have the plus 100K tier. The difference is that the agent behaves, let's say, in a different way depending on your balance. So for example, when you have less than 10K, it's not that profitable to be continuously swapping and bridging between stablecoins because you are paying gas fees, etc. So actually, it makes more sense to deploy your agent in one chain, in this case, Base, right? And then we are, of course, like giving like a privilege to the users that are putting more trust in our product with more executions per day. So as you can see, the silver tier has 4, then 12, and the platinum has 24. So that means executing every hour. And this is interesting because an execution is a moment in time where the agent analyzes whether to move the money or not, right? So that means, and we have conducted many back-tested analysis, that more executions equals more yield. And we actually see this moving to the, let's say, how we call it is blockchain speed, in the sense that the agent is going to be able to execute every block. Because that's how time is measured in blockchain terms. So yeah, this is mainly the product nowadays. We have around 500K in AUM. The agent has conducted more than 300 million in volume for Base and Arbitrum, and we have around 400 users. So yeah, continuing with the, well, Moritz, I don't know if you have any questions until now. If not, I can just continue.
I have a few, and maybe from the auditorium that comes through. You mentioned that you tried to optimize the risk-adjusted returns. With
Yes.
that comes the question, so how do you kind of measure risk, and how does the AI measure the risk, and how do you incorporate this risk versus return? Because the risk is not only volatility as in the traditional markets. There might be much more technological risk, the risk of smart contracts of the platform, and so on. And how do you assess that?
Sure. I mean, anyone that is I'm going to explain it, of course, but anyone that is curious to learn more, you can go to docs.sale.money. You go to the Learn tab, and the strategy. So basically, the agent in each execution is considering like the protocol APY or the yield source APY at that moment in time. Then we are considering the liquidity that that yield source has. We also measure the historical volatility, and we have these sensitivity parameters to adapt the portfolio size to each yield source at that moment. Then, of course, the agent is cost aware, so we are measuring like gas fees, slippage, swap fees, bridge fees. So basically, the result it's an equation where we take like the potential output of a reallocation, we subtract the cost of that reallocation, and the agent decides if that money movement is profitable or not. We have a full paper reading about it. You can check it out. It's pretty technical, a bunch of formulas, but this is, I mean, from a simple perspective, how the agent works. Yeah.
Okay, but so can you avoid fraudulent platforms?
You mean like potential hacks on the yield sources?
Yeah.
Yes. So let me go back. Oh, let me go back to the docs. I mean, this is like recent news. Last week, we launched an internal security agent, which is Sonar. We call it Sonar. And what the agent is doing right now is that it's, I mean, 24/7 scanning the stable coins that the agent is transacted with, and also the yield sources, the TVL of the yield sources. So the first two features that Sonar has is that if there is a stablecoin DPEG of more than 5%, every 5 minutes, the agent is going to swap out of that stablecoin. And if there is also an aggressive TVL drop of more than 20% in a 1 hour time frame, the agent is also going to get out of that position. So agents are not only going to help us like in chasing the higher yield, they are also going to help us in protecting capital within DeFi. Of course, Sonar is going to evolve a lot. These are actually only two features, sorry. The next features are going to be related to, getting real time data from security audits, also scanning social media. So when there is like a potential hack, a rumor, whatever, your agent can protect your capital. But yeah, this is just, let's say, stage one for security agent, but there are many more things coming in the next months and weeks.
Interesting. There's a question from the auditorium asking what is sales revenue model? Do you take a performance fee, a management fee, something else? How do you make money?
Sure. Let me go to that slide. So here is the thing. You can I think when you have a company, when you are doing any business, you can monetize those. I mean, you can get let's say revenue from the actors where you are adding value. Let's say. So we have three actors here. There are clear winners. First is the users because they are earning a higher risk-adjusted net yield. Then we have the protocols and the yield sources, vaults, etc., because we are deploying capital liquidity over time into those yield sources. For example, recently we were talking to Gauntlet, one of the biggest vault curators in the world. They are interested in trying to get liquidity from agents, so they are going to start sharing revenue with the agents, and this is going to only accelerate from now on. And third, we have the networks that are looking, of course, for TVL and volume, because volume, and not only volume in a gross term, also like number of transactions, right? So, for example, as I mentioned before, we have conducted around 300 million in volume for base in only 4 or 5 months. So what this means is that the networks are going to be incentivized to attract agents. So how do we plan to monetize each is like users. We are going to charge a performance fee. We are not charging it right now because it doesn't make sense to charge when we are this small for now. But yeah, I mean, the plan is to monetize the user to performance fees. Then the protocols and the networks, what we are going to have, and we are already building it, it's an incentive marketplace where, for example, the protocols can attract liquidity from the agent if they incentivize the agent to come. So we as a company, we will take a cut on that incentive, and we'll pass the rest to the users, because we can't compromise like the behavior of the agent trying to actually get the highest potential yield. And then the networks is the same, but with different metrics, like mainly transactions and volume. So this is the business model, like overall. Yeah.
All right, interesting. Yeah, and you're going to disclose your earnings so that every user clearly sees how much he is paying and how much you are going to receive in commission or incentives and so on. So you intend to do it as transparent as possible.
Sure, sure. It's going to be, I mean, completely transparent. And the thing is that, and this is, let me go back to the product. You can always go to the permissions here, and you can actually, I mean, click in each of one in each box, and you can see what you authorize the agent to do. For example, this is an approval to deposit in Aave, Muel, in Fluid, Morpho, all the yield sources that we have integrated. And
Yeah.
when we establish the performance fee, this is going to be like a 4-column here that is going to say fees. And you will be able to click there and check, for example, that the agent is going to be able to charge you a 10% performance fee, which is like
Right.
taking 10% of your
Yeah.
earnings.
Regarding the risk profile, in traditional finance, we are used to a concept where the user is able to say, I would like to have more or less risk, and he would permit an allocation purely in investment grade bonds, or he would be open to have up to 20% of non-investment grade or whatever. So is the user able to just define his or her individual risk profile, or does he do it indirectly by permitting certain protocols or coins to be used?
Yeah, that's a great question. We were like super focused on having the best possible infra and base layer to create like the full personalization experience. Actually, recently we became the first and only agent in the world that is capable of swapping and bridging without taking custody. So we released this feature, like I would say, like 3 weeks ago. So right now our main, I mean, let's say our complete focus is in making the experience as personalized as possible. And what that means is that you are going to be able to select which stablecoins you want. Right? Maybe you like USDT and USDT only. You don't like USD because you believe, I don't know, USD is a basis trade, so it's not that safe. You don't want
Okay.
USD. So you can select that. Then
But
you can select, yes.
do you help the user to choose which stables are the safest and which one are the ones that are a little bit less reliable?
Yeah, great question as well. So going back, first step is that you will be able to select between what we call sale mode, which is like, let's say, our strategy, our recommendation, our agent in
All
the way
right.
that is working right now. And you will have a custom mode when you can personalize your agent whatever you want. When you choose custom mode, you are going to see, for example, with this first step, stablecoins. Each stablecoin is going to have a risk score that we are doing it, by the way, not ourselves. We will use a third party in order to make it like even more like logical and safe for the user. So you will have like a risk score for each stablecoin. Then you are going to choose networks. Which networks do you want to transact with, right? Then maybe it's safer to use Ethereum mainnet if you have a high balance than to use, I don't know, Sonic, for example. And then after, and this is like the most important part, you will have all of the yield sources listed for these stablecoins on the chains that you chose. So each yield source is going to have as well a risk score. So you can, decide to deploy that really safe agent if you only, for example, want to use USDC and USDT, and the on Ethereum mainnet, and the protocols that you want are Aave and Fluid and Moonwell, because those are like really battle tested protocols. Or you can, go lower in the risk curve and sorry, higher, and you want to choose like more risky yield sources that can give you a higher yield. So it's going to be like fully up to you, but we want to help you as much as possible in the process. You always have the possibility of using like the sale mode, which is that basically the strategy that we are deploying right now, which, for example, we're really careful about what yield sources are we integrating, what stablecoins are we using, and so on.
All right. There's an interesting question from the audience asking, is each agent acting independently? So let's say 50 agents want to swap and use another protocol at the same time. Would there be 50 swaps, or are these agents aggregated? Are they acting on behalf of a group or against each other? Is there a wind dog? I don't know what the English translation is, principle, or how does it work if with the different agents?
Yeah, great question. This is also like it's also like a political question. We have had this debate like internally a lot. So you want to build like a libertarian system where it's full competition, each agent like playing around by itself and only chasing like its own interest, or you want to choose a system where you want to try to let's say like increase the global or the collective output, agents transacting together and this stuff. This is a decision that, to be fully transparent, we haven't taken because we don't have this problem right now. Each agent executes at a different time because, for example, if you created your agent at 7 p.m. today, it's going to transact, imagine, every 4 hours. So you have a cycle of executions. If I created mine at 1 a.m., it's going to have a different cycle of execution. So we currently don't have the problem of agents like depositing at the same time or withdrawing at the same time, but we are going to have it, hopefully. And my take over this right now is that we will eventually have to prioritize the system when we get too big. Because, for example, we are going to be able, our agents are going to be able to really change or let's say have a huge impact in the market in terms of liquidity, of moving from one network to another, in terms of volume of the agent going from one network to another. So we will start to having a more collective sense. But as of the moment, is each agent acting individually.
And do they talk to each other? So does one agent know what the other one did?
Not for now.
All right. Okay.
Not for now, but yeah, that will happen. That will happen.
I mean, that's a little bit amazing, because if you kind of translate it into the traditional world and having a bunch of portfolio managers sitting in one room will always lead to the questions if and where you put Chinese walls between them, or if they are obliged to use the same kind of research material, or if they are have to use the same universe or whatever. And I mean, that would come to some even kind of political interesting issues.
Questions. Yeah.
My question would be, I mean, as we all know, AI makes mistakes, which is not so bad if it's just writing an article and there is a footnote wrong or whatever. When it comes to real money, then it's a little bit bad if AI makes mistakes, because in the worst case, your money might be gone. How do you tackle that, or what is your your take on that?
Yeah, I mean, that's also a great question. So the key here are these permissions that I'm showing. Why? Because your smart account, for example, for the yield section, can only deposit and withdraw from these protocols on Base and Arbitrum, can only swap between these two stablecoins, and can only bridge between these two chains. Technically, I mean, it's impossible that your smart account will do something different than this unless you trigger it. Like you want to conduct, for example, a withdrawal. So you are triggering your smart account, you directly as a user from your account. So what this means is that, yeah, sure, our agent can make a mistake, but maybe a mistake would be like, okay, I send money instead of to Aave, I send it to Moonwell, but that doesn't mean like a loss of funds or that is sent to a third party or a different actor, you know. So your money is going, it's only always going to be within these protocols and only can conduct these actions. So you as a user, you can go here and you can verify what your agent can do. And of course, there are risks, that there is risk here and there is risk in DeFi, like itself, like a hack of a huge protocol and this kinds of a scenario. We are trying to mitigate that risk with the security agent, but it's not that your agent can go and send money to me, whatever. I mean, that's technically impossible. So this is the way we are tackling this, the hallucination risk, let's say.
All right. There are people claiming that with DeFi, even by employing or deploying a stablecoin, you can, if you're willing to take some more kind of exotic platforms, that you can easily reach some 20-30% APY. Is it possible with your system, if you are just putting the parameters on more aggressive, or how exactly would that work, and what is the kind of the feasible range of yields that you would currently see as a kind of normal range of yields in DeFi?
Yeah, so I think that 20-30% like guaranteed APYs are always a lie. And I think history has proved that. It's possible that you can get in some these, you know, exotic yield sources, and you are probably receiving a reward that is incentivized with the protocols or yield sources token.
Yeah.
It's possible, and our agent can do that. But the thing is that to promise that, you know, high double-digit APY over a long time frame, it's not sustainable. We have seen it recently with the Stream Finance. Those guys were promising a 20% guaranteed APY on USD, and it wasn't true because the money was actually off chain. It was like really opaque, the whole system. So what we like, what we like um, to say is that basically sale is built in a way that can give you our goal is a double digit APY, like it's what we wanna be, like 10%, 12%, 15%, and of course that's correlated um, with the interest rate and other things. But the key here is that the agent is going to protect your money and is going to outperform like the base yield that you can get for depositing or buying treasury bills or having the money in your bank account. We have back tested a lot, and sale is always going to at least 3x the yield that you may be receiving with a dollar account, and that is going to be the goal. Of course, with the personalization, it's going to be possible for some users to use the system in a way to be more aggressive and more risky, but that is going to be up to them. We don't like to make these huge promises of super high yields, because most of the time it's just, you know, smoke and noise.
Regarding the stable coins that are open, do you already have euro-denominated stable coins in your system? And is there a different APY if you just want to focus on euro?
Yeah, that's a great question. That is actually one of our next integrations. We want to integrate the euro stablecoins, and it's interesting because with the euro we have a situation where interest rates are lower than dollars. So if you have euros, you are not going to it's going to be tougher to get, I don't know, a 10% yield. But if you compare it with the interest rate that you may receive with an European bank account, it's like um, I mean, you can be in the 6-7% area. So we are looking to integrate euros. The only problem that we have is that we will have less stable coins, less yield sources, and less infra, for example, for something like bridges. But it's definitely possible, and we can launch that product super easily. We are just figuring out how do we want to market it, and also how the UI is going to look, for example, for someone that is holding both stable coins. But yeah, it's super feasible. The euro has less liquidity. That's a problem, but we also think that we can play a role in increasing, like, let's say, euro-denominated stablecoins valuations and market caps. So yeah, it's coming.
All right. I mean, another advantage you have when you're not doing it, you invest your money via traditional finance instruments, but using DeFi, is that there's usually no withholding tax attached to it. However, you should be liable to pay taxes on the returns. I know you are not a tax advisor, and we don't want to give any tax advice. However, how does it, from your experience, work, and does SALT give some support on the kind of reporting side of it, or how would one who wants to declare all the taxes to the authorities ideally work forward? Because this is all new, and I think it might be pretty tricky if you're talking about real money, how to tax it.
Yeah, I mean, sure. I can talk a little bit about the Spanish tax system because that's the one I know the most. But yeah, actually, how it's going to work from a product perspective is that you are going to be able to go here and you are going to be able to download like a tax report when you can like get all the transactions that you again conducted, like your initial balance, your end balance. And I think in most countries you are going to pay a capital gains tax. So, for example, in Spain, it's around 20%. So if you deposit, I don't know, 10K and you made 1K, you're going to pay $200 from that earnings, right? But yeah, that happened the same for every let's say capital gain taxable asset, which is stocks, crypto, and yeah, and even real estate, everything. So yeah, that's how it works. So we will facilitate to the users a lot the tax reporting in the sense that you can just download a spreadsheet and you can submit that to your tax advisor or whatever, but it's going to be easy. And I think many crypto products or many crypto, let's say mainly exchanges are doing this. And we want to take what's good from them. And I think this is one of the good things. And yeah, the idea is to make it easy because it is indeed like a taxable event. You know, you are depositing stable coins and you are at the end of the year and you are going to have more. So you gotta pay taxes on that gains according to European laws or most of the countries in the world.
Valid point. And I would like to understand a little bit more the process for a network, or more to say, a protocol to become investable. Is it you to say, all right, now we are willing to use Aave or any other protocols, or is that part of a decision the AI takes? So what's the scope? So currently you define which platforms, which coins are kind of accessible for the AI, or can AI itself scroll the net and say, I found some even more attractive protocols, and I'll allocate something there.
Yeah, sure. That I mean, The thing is, we are in a process like with DeFi agents, and where we are going from more determinism to, let's say, eventually to financial AGI and complete sentience, let's say. At the beginning, it's normal. I mean that, products, companies like us, we are trying to be more deterministic in what networks, what stable coins, and what protocols we are integrating. And what by deterministic, I mean that we are not letting like inference uh, make these type of decisions for now, because we believe that we need like more data and more and a more like reliable track record for many yield sources, and also like for our system to be able to decide by itself which network or which protocol or which stablecoin is going to integrate. So as of the moment, these are decisions that we are making internally. So we are only choosing battle tested protocols with years of track records. If we are integrated, for example, a vault, we are doing deep risk analysis on the collateral that vault is using. With the recent events in DeFi, where there were many vaults having exposure to stream finance, we weren't exposed because of that. And this type of a scenario, for example, with stablecoins, we are only using USD and USDT, which are like the biggest one with the longer track record. And with networks, we have like the two L2 networks that have more TVL at the moment. There are more coming in the pipeline, but how is this going to work is that, imagine that we integrate, I don't know, Plasma tomorrow. You are going to have a pop-up here in the app. The agent is going to reach you on Telegram and is going to tell you like, okay, Plasma is now available. You can go to the app and you can decide if you want to have Plasma integrated to your strategy. So we'll give you the risk scoring of that network and of that stablecoin, which is going to be probably USDT, and you are going to make that decision by yourself. But we are kind of recommending it and telling you like, okay, this is possible. You can access these yield sources on Plasma, but then it's your decision. What is going to happen in the future is that probably, let's say, our internal agent and AI systems are going to be way smarter than me and my team to make these calls. So probably they are just going to substitute ourselves. But yeah, this is like the reality today versus what it could be tomorrow.
For me to understand a little bit better how this process works to include Plasma in the universe, would it be for me to, like in a traditional system where I just access my dashboard and then I click or put a switch, or can I do it by just telling my AI agent, okay, as of tomorrow, please include Plasma? So would I do my decisions just in a communication with the agent?
Yeah, it's going to be like this. Imagine that you are not using the application like every day, right? So the agent is going to reach out to you on Telegram or on email. We are integrating email soon, and it's going to tell you like, okay, there is like this new network available, this new stablecoin or these new yield sources. So you have to go to the app, click this link, you go to the app, and you are going to have, you need to sign a transaction. That's because it's a cryptographic permission that enables like the agent to transact your stablecoins and send it to these networks or these yield sources.
Yeah.
So it's not going to be like something like I'm going to reply yes to the agent and it's going to be done, because you have to sign that permission, and we need to be sure that you are the one signing that permission and that you understand everything, right? So that's how the process is going to work. Like you go into the app and sign in, but the agent is going to reach out to you wherever you are on the internet.
All right. And I'm a lawyer by education, sorry for asking, but from a setup, Sale is not providing financial services. Somehow it's just issuing an app with an AI and everything
Yeah,
else.
yeah,
Yeah.
you are creating a self-custodial account. So you are the owner of that smart account, whether you use, because here I think I can show it. Yeah, we have like as login methods, we have Google, Telegram, Forecaster, Twitter, email address, phone number, passkey, or you can just go and use any crypto wallet, right? For example, for this account, I have Google. But yeah, the thing is that you are the holder of the private keys for this account. So what that means is that there is no a custodian like that can play around with your money. Then what you are doing is that you are allowing a third party to only conduct, which is the agent, to only conduct a limited scope of actions, but you are signing permissions for each action. So the money is still yours. It's always under your control.
Okay, so even for a swap, for example, which is recommended by the system, I need to sign the transaction.
Yeah. I mean, you need to sign the approval for the agent to conduct that transaction. Then the agent conducts that transaction autonomously.
All right, that's okay. So I mean, this is all in all quite impressive, and I think it's likely to be the future of finance somehow. It is open to, well, each and every investor. So you are talking to retail, or what kind of investor is the classical investor? Because tentatively it's a system that is trying to attract people that are not themselves familiar in doing all this crypto stuff
Yeah.
themselves.
So you mean the user, right? Just to be clear, like okay. So I think that recently, like, there are like many important or prominent crypto people that are saying that, I mean, you need to get outside of the crypto bubble, like crypto Twitter and that stuff that are like, I don't know, 10,000 guys like trading and testing products. And
Yeah.
that's true. I mean, that's our goal, like to reach the user outside of crypto. And we are building the product in that way. That's why we have social login. We are releasing many improvements for on-ramping and off-ramping directly from your bank account. And we want to make the experience really easy, etc. But when you launch a product or a technology that initially like um, it gets seen like risky, because I mean, what is this AI that is managing my money? I mean, how is this possible? Crypto natives are really useful because these guys are willing to test your technology. They are willing to join your community and give you feedback. And these guys are using these products like every day and trying new things. So that's what we did. We initiated like building a community, a crypto community on Discord. These guys are, discussing, giving us feedback, and we are improving the tech stack progressively. And we are going to reach a point, I would say, next year, where the value proposition, where the value proposition is going to be so clear that every user or every person like on Earth will be able to realize that this is the best way to get yield and protect your money within DeFi, right?
Yeah.
So it's going to get easier and easier and easier. But we are starting with crypto natives, and we are going to move outside of that bubble progressively with time. There is another thing which it's fundamental for the growth of our company, which is that we need to reach all of these guys, right? We need to try to reach big money with funds, wallet providers, DAO treasuries, fintech, neobanks, traditional banks, etc., right? So the way we are going to approach this is that we are building an SDK to enable every neobank, and by neobank, I mean, like, imagine a bank that's self-custodial, where every user has a smart account and is using that smart account to transact stablecoins, and you have a debit card attached to it, whatever, right? The thing is that there are like hundreds of fintechs and neobanks right now adopting stablecoins. And we believe there are going to be like two different differentiation points between these entities. There are going to be yield and experience, user experience, because it's super easy to build a smart account and enable, like, I don't know, cross-border payments. It's a stablecoin. I mean, of course, you can do cross-border payments, and the technology to attach a debit card to that smart account is commoditized right now. So you're going to be able to offer to your users like the best possible yield and the best possible experience. So we are also building this SDK that will enable like every neobank or a stablecoin company out there to connect with Sail and to deploy an agent for each user. And you can also be able to have a chat within your application, and the user can chat with the agent and ask anything related to yield or to other aspects of your application. So we are also seeing like and exploring already this B2B angle, already talking with potential customers for this product from Latin America, from Europe, and from the US. And there seems to be an interest because they are competing. Like the technology to create this type of neobank is commoditized right now, and we believe that we can add value in the other two value propositions that they have. So that's another area of focus for us.
Pretty cool. Alejandro, we got to the end of our session already, but
Yeah.
It was quite interesting, and I think that was very helpful for many people to understand a little bit more how it works and how easy peasy your setup makes it for normal investors to get access to the yield DeFi is offering. Thank you very much for explaining and introducing us to it, and yeah, wishing you and your team all the best. And how many people are working on the team now on Sail?
We are a team of 6. Yeah.
Really, really cool, and thanks again, and all the best. Cheers.
No, thank you guys for inviting me. Have a good day.
Goodbye.
Bye.